Good morning once again. Today we're going to start our discussion on financial statements. Okay, so this is just a review because I know you have accounting subjects and you have already discussed a lot of this in your accounting subjects. So let's have a quick review of the fundamental concepts as regards financial statements. Okay, so the first question is, what are financial statements? So I have already given there a basic answer. Okay, others might define it differently, but in a nutshell, financial reports, aka financial statements, these are formal documents. Okay, so we have here. Let me put this in bold. Okay, so they are formal documents. By formal, we mean they are prepared in a way that subscribe to certain standards. Okay, so it's not something that's the opposite of which is informal, where you can just do it on your own way. When we say formal, it has to subscribe, it has to follow certain principles, and most of which is notably the GAAP, generally accepted accounting principles, as far as recording the transaction and then summarizing it. So these are formal documents used to comprehensively and accurately record. Okay, so there's the recording, there's the journalizing, putting it in ledger, and then summarizing it. And then it should reflect an enterprise financial outcomes. Okay, I mean financial conditions. So that's the balance sheet, financial conditions, and also operating results, that's the income statement, and the flow of cash, the cash flows in a specific period. Okay, so in a standard financial report, a company's financial activities and performance are presented in a readable manner for people to view and analyze. So that's what financial statements are all about. Now, why does a company need financial reports? Okay, so there are many reasons. Can some of you chat or unmute yourself if you can? Why do you think a company needs financial reports? What have you learned from your accounting subject? Who are the users? Okay, and why is it important that the report be done in a formal way? Okay, can anybody answer this? Why does a company need? Yes, Casey, please.
Sir, it is important that it is important that a business uses financial documents to report its financial standing, because these statements are verified by reports and legitimate business documents that can verify the transactions of the business. So for example, backed up po ito ng receipts and ng iba pang mga invoices na nagpapakita po na legitimate yung transactions ng isang business sa iba pang entity.
Yeah, very good, very good. So, Casey mentioned something about backed up, no? So that has something to do with the formal documents, which is to say that a financial statement is not just plucked out of thin air. Hindi lang basta-basta kumukuha ng mga figures. There has to be evidence, there has to be receipts or documents that prove the existence of the transaction, and these transactions are summarized. And Casey also mentioned that there are other firms or other entities that make use of the financial statements. No? Francine also mentioned here. I'll just read, no? Sino pa dito? Sabi ni Francine, investors use them to determine if the company has a good financial position. Okay, so let me copy this and share it with everyone, because this is also a good answer. So thank you, Casey, a while ago. Your answer is very much correct. Okay, so I'm having difficulty copying the. When you answer, class, may I request you to please share to everyone, not only to me, so that we can discuss your answer. Okay, so this is from Francine. And Francine stated that investors use them to determine if the company has a good financial position as a reason for me to invest. Okay, so that's true. Financial statements are important because they report the financial standing of the company, and it's needed in order to come to decide for investors as to whether they will invest in the company or not. Okay, so that's very important. So it tells us that it's not only the company that make use of the financial statements. There are other parties. Okay, so also from sino to? Sandrine, no? Sandrine says that financial statements are important because they help in evaluating whether the company is worth investing. Okay, similar to what Francine said. Yes, that's true. And also we have Clarence. It shows the firm's health, which will aid. Okay, so all of these answers, they are similar in the fact that okay, they all are related to the role of the financial reports as far as uh, potential investors are concerned. So, but not only the potential investors are reliant on the financial statements. There are other parties that are depending on the financial statements. For example, the government. Okay, the government which collects taxes from firms uh, checks whether the financial statements are valid through the function of assurance services through auditing firms. So there are the auditing firms are they have a quote unquote moral obligation to attest that the firm has followed the acceptable principles in recording the transactions so that the financial statements present fairly, okay, the results of the operations of the firm and its financial position. Okay, so there are many parties that are interested in the reports of a company. First is, of course, for investors. Second, for the firm itself. The firm has to needs these reports in order to make decisions about future investments or about how it can, let's say, for the income statement, how it can improve on their operations, how it can improve on their profitability. Okay, so these financial statements may be used also by the government, okay, and other parties, by suppliers also that may have a keen interest in how in the summary of the performance of the firm. Okay, so financial statements are very important. Now, from your accounting, what are the three types of financial statements? Some would say four. Okay, let's just take it at three. So anyone, please? What are the three basic types of financial statements? They are your. I'm sure you know this by heart. They are your. Yes, anyone? In types ng financial statements natin. Thank you, Sandrine. You're correct. It's the balance sheet, the income statement, and the statement of cash flows. Okay, and some would also include the statement of changes in shareholders' equity. So let me just write that. You have your balance sheet, your income statement, your statement of cash flows, and some include the statement of changes in shareholders' equity, or some would say changes in retained earnings. Okay, so these are the three basic types of financial statements. I just added the statement of changes in shareholders' equity. Now, of course, you have been exposed to what a balance sheet is. Okay, and the balance sheet gives us what does the balance sheet give us? What information can we get from the balance sheet? Do we get profit? The data about profit in the balance sheet? If I want to get the information about the net income after tax, do I go to the balance sheet? And the answer is, of course, class. Okay, the answer is no. Okay, obviously, guys, obviously, class, you do not find the net income after tax in the balance sheet. Okay, what you find in the balance sheet is it's a statement that records the assets, the liabilities, and the equity of the firm. Okay, and its financial position at a specific point in time. Okay, so that's important. Specific point in time. So when you look at the balance sheet, you'll find it in the title balance sheet as of December 31, 2021, for example. As of means, okay, as of means on that date, December 31, 2021, these are the assets of the firm, these are the liabilities, these are the equities. Okay, so it tells us of the financial position at a specific point in time. Okay, so what are the components of the balance sheet? What can we find in the balance sheet? What do we have here, guys? You have your assets, right? You have your liabilities, and you have your shareholders' equity or equity. Okay, so this is for a corporation. For a single proprietorship and a partnership, you'll have the capital. Okay, so for the assets, we can classify assets. Okay, let's say 5 types of assets. So what are the 5 types of assets or classifications of assets? Anyone, please? So let's see, what are the 5 different types of assets? Can anyone please explain or identify what are these 5 types of assets? Any answer? So number 1, you have your okay, let's see. Somebody answered. Okay, thank you. Yeah. Okay, you got most of it. Current assets, thank you. And then non-current, intangible. Okay, so correct. Okay, but let's specify them. First, you have your current assets. Okay, and then okay, let's see. Now, of course, your non-current assets consist of, let's put this here. What are the non-current assets? Anyone? What's the composition of your non-current assets? You have LTI, then you have your PPE, and what do you have? IA, and then you have your OA. Okay, can anyone explain to me what? Okay, so what's a LTI? LTI is?
Long-term investment.
Yes, correct. Thank you. So these are your long-term investments. Okay. And then PPE is your property, plant, and equipment. Okay. Or it depends on the nature of the business. It can be your fixed assets. IA is your intangible assets. Intangible assets. Can you give an example of an intangible asset, guys? What's an example of an intangible asset? Okay, patent, correct? Patent, you have goodwill, copyright, etc. Okay. Intangible means it cannot be touched. No? And then, of course, those that cannot be classified otherwise are your other assets. Okay, so these are our non-current assets. For the current assets, these are also important. So what are the different types of your current assets? You first have your, and how are current assets, by the way, arranged? According to, this is arranged according to what? According to anyone? How are current assets arranged? Current assets are arranged according to letter L. Okay, correct. Thank you. Liquidity. All right. So kindly please, when you answer, paki-chat na lang. Kindly chat to everyone so that everybody benefits also from your contribution. So it's arranged according to liquidity. So we know that, of course, the most liquid asset is your cash. Okay, then you have your, what's the next one? Okay. So thank you for your answers according to liquidity. Thank you, Tony. Thank you. So what's next to cash? In the pecking order, you do not just prepare financial statements where you arrange it according to how you feel. Okay, that's not it's not acceptable. Financial statements are constructed in such a way that it's formal and it follows certain norms so that it will be standard. Okay, what's the next one? After cash, what do we have? Anyone, please? So for assets, we have current and non-current. We already identified the non-current assets. How about the current assets? After cash, what do you have? Okay, let's see an answer here. All right, you have okay, receivables will be here. Receivables. Okay, so let's see. Okay, allowance for doubtful accounts will form part. It's a contra asset account, and it goes with the receivables. Okay, supplies. It's depends kung ano siya, no? But it's not the second one. Supplies will either form part of another current asset, and as you know, it can be an expense also. Notes receivable, accounts receivable, they're all lumped here. Okay, they're all lumped here together with receivables. Advances to employees, okay. Advances to employees are collectible from employees, okay. So receivable din siya, or it can be pwede siyang ano, no? Isa pang ano, prepaid expenses, nasa prepaid siya, no? Nasa dulo. Ano yung pangalawa? Okay, wag mo na yung pangalawa, baka ano pang inventory comes after. Okay, inventory comes after receivable, so inventory is here. Okay, remember, this is arranged according to liquidity. So which is more liquid, receivables or inventory? Of course, receivables, because receivables are just collectibles from your customers. So inventory hindi pa nabebenta, no? Okay, so what is the how about the last, guys? Okay, all right. So after inventory, you have we have our prepayments. Huh? These are our prepaid assets. Okay, all the types of prepaid. Okay, we haven't answered the second one. Okay, cash. Okay, cash and cash equivalents go here. Okay, and I think I got the answer here. Let me see. Cash and cash equivalents form part of cash. And I saw, okay, Francine, thank you. So after cash, you have we call marketable securities, or these are also your short-term investments, as distinguished from your long-term investments. Okay, marketable securities. Remember, class securities. Okay, these are IOUs, so it can be an investment in treasury bills. Okay, it's almost cash, but it's not yet cash. Okay, so in the order of liquidity, cash, of course, is the most liquid, followed by marketable securities, then receivables, inventories, and prepayments. Okay, of course, prepayments, there are different types also, prepaid rent, prepaid insurance, etc. Okay, so these are the uh, types of assets. We have current assets and non-current assets. Current assets, there are 5: cash, marketable securities, receivables, inventory, and prepayments. Non-current assets, you have long-term investments, property, plant, and equipment, or fixed assets, and then intangible assets, and then your other assets. Okay, so those are the things that you can see in your asset side, in your balance sheet, and it tells us of the financial position. So let me just write that. Financial position of the firm at a specific, notice it's point in time, okay? It's point in time, it's not period of time. Because when we generate the balance sheet, okay, you'll find there as of or as at, okay? Sometimes it's as at or just the date, December 31. And it tells us that the cash amount on as of the end of December 31, 2021 is this amount. Of course, the following day, technically, it can be different already because there might be transactions or there might be movement of the accounts. Okay, is it clear, class? Could I have a thumbs up or a chat if so far you recall the types of or what you can see in your balance sheet. Okay, clear so far, class? Okay, that's actually just a review, no, of what you have discussed in your accounting. Okay, how about an income statement? what do you find in the income statement? Okay, in the income statement, you'll find your revenues, your expenses, okay, your net your net earnings or your net profit. And it tells us of the, what does the income statement tell us? It tells us of the, this gives us the results, right? Results of the operations of the firm at a specific, this time it's a period of time. Okay, period of time siya. No? And when we say period, it can be 1 year, it can be 1 week, it can be 1 month, it can be even 1 day. Pero the difference between the income statement is that in the income statement, you will not see the assets, liabilities, and shareholders' equity, but rather you will find there the sales accounts, revenues, the expenses, the costs, the tax, the interest, and the net earnings or net income after tax. That's what you'll find in the income statement. And it tells us of the results of the operations of the firm at a specific period of time. And why is it period? Because, as we said, it takes a look at the operating results, say from January 1 to December 31. When the company reports it that way, okay, what do we call the year that was used? So from January 1 to December 31. Okay, how do we call this type of period, guys? Anyone? As against, let's say, June 30, some would report their financial reports this way to June 30, so July 1 until June 30. Okay, what do you call this type? Yes, I see answers. Yes, thank you. Calendar year. Thank you, Caitlin. You're correct. This is this uses the calendar year. Calendar. On the other hand, this one is ito, guys. What's this? This is called your July 1 to June 30. What's that? What's that? That's your fiscal year. Okay. Fiscal year, calendar year. Okay, and the income statement, what do you find there? As we mentioned a while ago, we find the revenues, expenses, okay, profit, sales, depending on the account title being used by the firm. Okay, and lastly, what is the statement of cash flows? Okay, what do you find in the statement of cash flows? It tells us of the sources and the uses of cash from O, I, and F activities at a specific period of time. Okay, so let's take a look at this definition. So the statement of cash flows or the cash flow statement tells us the sources. Saan galing? Where did cash come from? And the uses. Okay, how was cash used? From, what's this? OIF activities. Anybody, please? So this is what the statement of cash flow does. It tells us of the sources, saan ang galing, and the uses, ang ginamit, yung cash. No? So the focus is, of course, on cash. From O, I, and F activities. What are those O, I, and F activities? Okay, thank you, Maxine. You're correct. Maxine, paki-share yung answer mo to everyone, please. Okay, thank you. So that's correct. So let me repeat. The statement of cash flows tells us where cash came from and where cash was used, sources and uses of cash. From three specific activities, you have operating, investing, and financing activities at a specific period of time. Okay? So just like the income statement, period of time and statement of cash flows. Ang balance sheet lang ang at a specific point in time.
Pag binaklas, wala. Isang 20 niya, bulok-bulok na siya dyan, depende sa siya pinapaglas. Sila ang anak.
Okay. All right. Any questions so far, guys? Quick review lang to ng mga financial statements generated by a company or financial reports. So you have the balance sheet, you have the income statement, and you have the statement of cash flows. And for the fourth one, maybe we'll do an example of that statement of changes in shareholders' equity or statement of changes in retained earnings. All right. So for the next sessions, we're going to learn more about these financial statements. Quick review lang din kasi I'm sure you have encountered this in your accounting subjects. So let's go to the basic model. Okay, so we're going to use Excel to analyze, prepare financial statements. Okay, so let me increase, zoom this. All right, so we have this company, that the name of the company is Advanced Technologies. And we're given the financial statements below, and we're asked to construct the statement of retained earnings, the cash flow statement. We're also tasked to calculate the net operating working capital, total net operating capital, net NOPAT, net operating profit after tax, free cash flow, ROIC for the most recent year. Okay, let me pause for a while. Have you met these terms in your accounting? Did you meet the term NOWC? Say NOWC, ano? Net operating working capital. Then you have TNOC, total net operating capital, and then NOPAT, okay, and then FCF, and then ROIC. Okay, chat please, class, if you have encountered this in your accounting subject. If I ask you to compute now for the free cash flow, would you be able to compute for that? May I have some feedback? Yes or no, please? NOWC, net operating working capital. TNOC, total net operating capital. NOPAT, FCF, ROIC. Okay, so I guess you agree with Francine, no? You haven't met these terms in your accounting. So the things that you did in your accounting subject, we're not going to do here. Okay, I'm not going to ask you to journalize the transactions, post them to ledger, and then summarize them. Okay, and then do a trial balance. That's not the intent of this subject. Okay, but we will be exposed to some types of financial statements. For example, have you met the term EBITDA? Okay, this one. Have you met this term in your accounting? Hello, class? Have you met the term EBITDA? Kindly direct your answer to everyone so that everyone can see. Okay, no. All right, so we're going to learn another way to present the income statement. Okay, so let's go here to our income statement. This is the income statement of Advanced Technologies. Income statements for year ending December 31. Year ending, which means This is for the whole period of 2021 and 2020. Okay, and the figures are in thousands of pesos. So this means this is 3 million, this is 2850 followed by 3 zeros, 2.85 million. Okay, so if you take a look at this, the income statement is presented quite differently from what you have learned in accounting, because there are different ways to present your income statement. This is one way where we make use of EBITDA, and then we have your EBIT, and then you have your EBT. Okay. All right. So first we start with net sales. When we say net sales, of course, we have already adjusted it for maybe sales returns and allowances, sales discount. Okay. I'm sure you have met that in your accounting. So your sales are adjusted for sales discount and sales returns and allowances. Okay. To arrive at your net sales. Okay. All right. Then we subtract from it operating costs except depreciation and amortization. Okay. Take note of this. Operating costs, and notice it's operating costs. Okay. So you're not yet going to deduct interest and taxes, because interest and taxes are considered financing costs. Okay. So it's specified here that we're going to subtract all the operating costs. Okay, so it will not include interest and taxes. All right. However, it will not also include depreciation and amortization. Okay, you have met the term depreciation, right? Kindly chat, please. And you have learned how to compute for depreciation. There are different methods. The most common one is the straight line method. Okay, please chat if you're familiar with depreciation and amortization. At least depreciation. Can you share your answer to everyone? Thank you. Thank you, Francine. How about the others, guys? If I ask you to, given the cost of the equipment, given the useful life, okay, given the, would you be able to compute for the annual depreciation? I'm sure you know, you will, no? Okay, so you have learned that in your accounting. Now, ang question, why am I segregating depreciation and amortization? What do you think is the purpose why I'm separating depreciation and amortization from the operating costs? When you say operating costs, it includes all. Andiyan yung cost of goods sold or cost of sales. Andiyan yung transportation expense, rent expense, insurance expense. Lahat na ng mga expense kasama dyan sa operating cost. Except, tinanggal natin si depreciation and amortization. Si utilities, kasama. Transportation expense, kasama. Representation expense. Whatever operating costs the company incurs, it's included in this operating cost. But we are separating depreciation and amortization. So what could be a logical reason why depreciation and amortization are being separated? Anyone, please? If you haven't studied EBITDA in your accounting, then maybe you would not have heard of the rationale for separating depreciation and amortization. But let me, any guess from your end, class? Why subtract from your net sales operating costs, but separate depreciation and amortization? What could be the reason for that? What's the nature of depreciation expense? Okay, so I'll give you a hint. When you say, for example, you journalize for them, let's say for a particular month, or let's say you're going to close it, the books, and then you're summarizing it, the depreciation expense is, let's say, 50,000. So if that was the depreciation for the whole year, 50,000, what do you think? What is the nature of the depreciation expense? What type of expense is that? When you say depreciation expense 50,000, do you pay 50,000? Yes or no, class? Okay. Yeah. Thank you, Francine. The answer is no. All right. Thank you, Tony. Please share your answer to everyone. Okay. The answer is no. Uh, what was the cash out there? The investment in the equipment. So when you buy equipment, right? You record that as equipment, for example, 50,000, and then cash, or maybe a payable. Okay, if you're not paying in cash. Okay, but depreciation, as you know, it's a it 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 has something to do with the matching principle. Match your expenses and your revenues, because you're not only going to make use of the equipment for 1 year. Other years will benefit from the use of the equipment. So what happens is that we allocate depreciation throughout the period of the useful life. And so this operating cost is actually non-cash. Okay, so that separates the depreciation expense from the other expenses, like interest expense. For interest expense, do we pay out cash? Yes. Okay. For transportation expense, does it require a cash outlay? Yes. All the other expenses class require cash outlay. Now, depreciation and amortization. Amortization is used with intangible assets. So, for example, you amortize patents, you amortize goodwill, you amortize brand, you amortize copyrights, etc. All right. So both of these, depreciation and amortization, are non-cash expenses. So why are we separating them from the operating costs? They're still part of operating costs. Okay. For some reasons, number one, we need to separate them because we would like to measure EBITDA. What's EBITDA? This is earnings before interest, taxes, depreciation, and amortization. Okay. EBITDA is a measure by which you subtract from net sales all operating costs, excluding depreciation, amortization, and excluding your financing costs, interest, and taxes. Okay, so we have the figures here for operating costs, except depreciation and amortization. Therefore, we can now subtract your EBITDA. Okay. Okay. Why don't we do this, class? Sorry, I think I gave you the wrong file. We should subtract this first. Okay. Could you kindly subtract? Could you kindly remove everything here first? So we'll be the one to compute for this. Anyway, I know you know this, but just to make sure that you follow along with the formula. Okay, so I'm highlighting those that we're going to compute. All right. So we have your net sales for 2021 and 2020, and then based on our records, the operating costs, excluding depreciation and amortization, are these two figures. Therefore, we can now compute for the EBITDA. EBITDA is an important measure. It's used also in ratio analysis. Some items make use of EBITDA to measure the performance of the firm. Okay, so this is equal to simply your net sales less your costs, excluding depreciation and amortization. So I can copy this to the right. Okay, so we now have our EBITDA. Then we subtract this time depreciation and amortization. Okay, so when we subtract this depreciation and amortization, we're given it's 190. Then we subtract this EBITDA minus DA, depreciation and amortization. And copy to the right. Okay, we now have what we call your EBIT, earnings before interest and taxes. Okay, so now you have met this term. I guess you were you haven't met these terms. EBITDA, EBIT is earnings before interest and taxes, which means we haven't subtracted interest and taxes. Okay, and then we're given the interest to be 88 and 60 respectively. So we can now compute for the EBT, earnings before tax, which is simply your EBIT less your interest. Okay. And then we're informed that your tax rate is 40%. Okay, so maybe let's give this a name. We can use taxes, or let me change this. Okay, let me give this a name, tax rate. Do we have other names here? Okay, okay, tax rate. All right, it's here. So tax rate, it's already here. Sorry, it's already here, and we gave it a name. Okay, so tax rates. Let's use that. So this is equal to whatever is your taxable income, your taxable income multiplied by your tax rate. There you go, tax rate. Okay, Control Enter, and we can copy this to the right. There. So this is now your net income. Let's complete this after tax. Or others call this NIAT. Sometimes it's also called EAT, earnings after tax, net income after tax. And it's equal to the difference between your earnings before tax less your tax this one we have to delete also, please. Okay, let me pause for a while and ask the class, are you able to follow along up to NIAT, net income after tax? Kindly chat, please. So far, are we clear up to net income after tax? Good, thank you. And let's wait for the comments of the other students. Okay, I hope others will also give their feedback, comments if they have reached up to this point. Okay, thank you. Okay. All right. Thank you so much for your comments. Okay, let's move on. Okay. Now, what do we do with this? So from the net income after tax, remember our discussion on one of the role of finance. One of the most important role of finance is dividend distribution. So the management will have to decide with the approval of the board of directors if the firm is going to issue dividends. Okay, in this case, the company announced that it will issue dividends to the tune of 57.5 in 2021 and 82.1 in 2020. Okay, now this is now your net income after tax, right? And let me see. Insert. I don't have the drill. Okay, why don't I have the drill? Okay, hold the line, please. It's not checked. So draw. Okay. All right. So here is my draw. Okay. So let me just illustrate this. So take a look at this as a pie. A pie. So this is your net income after tax. And from here, a portion may be distributed as dividends in this one. So the company decided that this portion, it's less than one half, this 57.5 thousand will be distributed as dividends. This one. Okay. So the total is 137.1. So that's 137,000 for 2021. Okay. And 57.5 of that will be distributed as dividends. Therefore, the remaining one, this will be, what will happen to this? This will be added to retained earnings. Okay, that's why you have here common dividends and then addition to retained earnings. All right, so we can now compute for the this one. Okay, the addition to retained earnings will simply be, let's draw a line here. Home. Okay, it's equal to net income after tax minus the common dividends. Okay. So this is now added to retained earnings. And if you attended the workshop yesterday morning, I discussed this in some detail. Itong addition to retained earnings na to. Okay, so clear so far, guys? Itong income statement natin. All right. Again, class, please remove. Sorry, I should have given you the unanswered one. I think I gave you the. Okay. Let me show you how this is computed. All right, so we now have your addition to retained earnings. So far, are you able to follow along, guys? Once again, kindly chat, please, if you're able to follow along our discussion so far.
Sir, nawala.
Hello? Nawala? Okay.
Sir, nawala po yung share screen niyo.
Ayan, how about this? Okay na?
Thank you po.
Okay. Did you saw me draw the net income after tax? Or nawala at that point? This one. Guys.
Yes po.
Until dividends. Oh, until here. Until here?
Until po dun sa sinabi niya na the remaining is addition to retained earnings.
The drawing you did not see.
We did po.
You did?
Yes po.
Okay, sige. All right. So this is now your addition to retained earnings. Now, what I said afterwards was I gave you the wrong file because there are answers here already. Okay, but anyway, It's anyway, you know that total current assets is simply the sum of your cash and cash equivalents, STI, short-term investments, receivables, and inventories. So we just add this. Okay, and if you were there yesterday, I gave you this shortcut alt equal to. Okay, instead of typing is equal to sum. So that's a shortcut, and then you press Control Enter. Let me alt equal to. So this is one way you can add also using alt equal to. And then for those of you who were there, okay, you learned in use of Control Enter. So for example, for this one, I want to add this for, of course, the usual way is to type sum, okay, and then open parentheses, but that takes so many keyboard strokes. No? The shortcut can be just type alt equal to, okay, and then it types already and highlights already the cells that you want added. Okay, and then do not press enter. When you press enter, it will go down to the next cell below. I want this active cell to remain there at F31 because I'm going to copy the formula to the right. So I'm going to press Control Enter there. So notice, as compared to, if I press Enter here, then it will go down here, and then I move up again, and then copy to the right. But if I just press Control and Enter, it will remain in the active cell, and then I can just copy to the right. Okay, so we now can compute for our total assets, which is just okay, the same thing, alt equal to. Sometimes it doesn't work, alt equal to. It's lacking. Just highlight this. Okay. All right. So let's, okay, our assets, 2,000. And of course, why are these assets needed? The assets are needed because it supported this. Okay, you would not have revenues of 3,000 without the assets. Okay, assets are the resources that a firm needs in order to generate the revenues of the firm. So you can see that these are connected. These are connected. So the total assets of this one is the one used to generate our revenues of 137.1. Okay, next we have how are the assets financed? So it can be via liabilities and equity. So we have here the liabilities, accounts payable, accruals, okay, and then notes payable. Again, the sum alt equal to. So the sum of your current liabilities are 310. Okay, there. And then we have long-term liability also, long-term bonds, if you recall from our discussion of the capital markets or debt market. Long-term bonds, 755.80. Therefore, our total debt is alt equal to kulang. So I just highlight both. Okay, so we have now our total debt. And then we have, oops, wait. I need this. What was your retained earnings in 2020 class? I deleted the wrong value. Anyway, 880, 800. So this should have been 880. So this should have been 720. Correct, class? 720 because if I sorry, it should be 750. 750 because if we add the two, the common stock and the retained earnings, then you have total common equity of 880. All right, then what will be the retained earnings for 2021? The retained earnings for 2021 will be the previous retained earnings is equal to sum 750. So that will be our base, comma, we will be adding to it what was added in the current year. So what was added to retained earnings was 79.6. All right. So that should be the formula for your retained earnings. It's the previous retained earnings, and then you add whatever was flowed back to the operations of the firm, or the addition to retained earnings. Enter. So we should be having 829.6. Okay, kaso bakit mali ito? 940 siya. Wait. Ay. Wait. Sorry, ito yung mali, no? Sorry, I made a mistake, guys. I placed it in the wrong cell. So, oops, the common stock is, the common stock is still 170. Okay, and then the retained earnings is total common equity is 880. It should be whatever is the previous retained earnings, and then you add 79.6. So total common equity should be, okay, sum okay. Therefore, the total liabilities and equity will be total debt and total common equity. 219.6. Okay, I think I picked up the wrong number here. Okay, so let me revert class back to the original. Can you please tell me what was the original retained earnings here? For those of you who did not delete, what was the retained earnings for 2020 and 2021? Hello? Maxine, what's 809.98? Okay, what was the retained earnings? 750 and 810. 750 and 810. Okay. Okay, let me revert back to the original. Okay. So I'm going to check this. In the meantime, class, let's just revert to the original. Which means something's wrong with this one. I will have to check what happened here. Because how do you compute for the retained earnings? It should be 750 plus this one, addition to retained earnings, no? To give us this one. So therefore, the 50, 60. Therefore, this should only be 60. Okay. So if this is 60, then this should be equal to this one minus this one. Okay, let's correct this, class. So this should be the dividends distributed was 77.06 or 77.1. Okay, may problem yung keyboard ko. Numbers lang. 77.1. Okay, sorry guys for this. So can you change this to 77.1? Okay, I think I made a mistake here. So 77.1, ang addition to retained earnings natin 60. Therefore, we can now use this formula. The retained earnings for 2021 will be the previous plus plus the addition to retained earnings there. Okay, now we got it. Okay, sorry for the mistake there. So kindly change this. I think I wrote the wrong figure. This should be 77.1. Okay, so when we subtract your net income after tax to the dividends, you get 60. Okay. So similar yung ano no, yung addition to retained earnings. Okay, and then when we go here, so how do we compute for this? For the retained earnings here, let me delete this once again. It's equal to, you're adding the previous retained earnings and the addition to retained earnings of this year there. Okay, so that's the formula. And when we add now common stock and retained earnings, we get our total common equity. Therefore, our total liabilities and equity will be our total debt plus our total common equity. So you have 2,000, and let's check if it's the same as your balance sheet. Correct. 2,000 are your assets. The sourcing comes from liability, the funding from liability and equity, 2,000 also. Also for 2020, same. All right. So any questions so far? Class clear so far? Sorry for the mistake there. Kindly chat, please, if okay so far. Any questions? Okay. Okay, thank you. How about the rest, guys? Feedback, please. Okay, thank you. All right. So once again, reminder to everyone to please send their replies, their responses to everyone. Okay. So we have the income statement. Okay, we have the balance sheet. Okay, and then thirdly, we have the statement of cash flows. Now, question, class. Did you learn how to make statement of cash flows in your accounting subjects? Kindly please chat yes or no. Did you learn how to construct a statement of cash flows? I have yes if you did, no if you did not. If you did not take that lesson. No, okay. Again, share your response to everyone, please. How about the others, guys? Yes ba or no? Did you learn how to construct the statement of cash flows? So if I ask you to construct, first, if I ask you what financial statements are needed, okay, if we're going to construct the statement of cash flows for 2021, what financial statements do we need? Answer, please, guys. We want to construct the statement of cash flows for 2021. What financial statements do we need in order to do that? Anyone? I didn't get a response from everybody about the statement of cash flows. If you learned how to construct it. Did you, class? Okay, don't remember. All right, so looks like hindi nyo na-discuss, no? All right, so okay, let's answer this first. What financial statements do we need for us to be able to construct the statement of cash flows or statement of retained earnings for the current year 2021? So what we need is the income statement, current 2021. We also need the balance sheet 2021, and we need the balance sheet 2020. Okay, so there are three financial statements that you need in order to generate the statement of cash flows for a particular year. You need the current year income statement, the current year balance sheet, and you need the previous year balance sheet. So with these three financial statements, you'll be able to generate the statement of cash flows for a particular year. Okay, but before we go to the preparation of the statement of cash flows, let's do some metrics. Let's compute, okay, measures like net operating working capital, total net operating capital, the increase or decrease in total operating capital. Then we have your NOPAT, net operating profit after tax, which is different from NIAT, net income after tax. Then we have your free cash flow, okay, and then the return on invested capital, and then your MBA, and then your EVA. These are measures, very important measures, which I am sure you did not discuss in your accounting subject, and which we're going to discuss here in finance. All right, first let's start with the NOWC, net operating working capital. Okay, what's the formula for this? This is the formula. The net operating working capital is equal to your operating current assets minus the operating current liabilities. Okay, so if we go to our balance sheet, so we have this as our current assets, cash, short-term investments, accounts receivable, and inventories. Okay, I'm going to ask you a question. Kindly chat, please, if you can. Okay, which items here are your operating current assets? So operating current assets minus operating current liabilities. If you take a look at our total current assets, can you identify 1, 2, 3, 4 to correspond to the first one, second one, third one, fourth one? So can somebody please chat? What are your operating current assets here? You can just type the number 1 for cash and cash equivalents, 2 for short-term investments, 3 for AR receivables, and 4 for inventories. There are no prepayments. Okay, waiting for your response, guys. Just a guess. Guess lang please, class. 4. Okay, thank you. Thank you, Milford. Francine, 1 and 3. Okay. Any other answers, guys? Operating current assets. One and 4, Francine, thank you. How about the others? Any guess as to which of these in cash and cash equivalents, short-term investments, accounts receivable, and inventories, which of them are your operating current assets? Let's give a few more seconds to the others. So is it cash equivalents, short-term investments, accounts receivable, inventories? Which of them, class, is your operating current assets? May I hear from the others, please? Your guess? Five? Anong five inventories? Okay. All right. So you have iba answer natin. Okay, let me explain. Okay, we said operating current assets. Let me write that here. Operating current assets. Okay, ito lang naman yung operating current assets natin, di ba? Ito lang. Apat lang yan. Cash and cash equivalents, short-term investments. Okay. All right. Operating current assets, as the name suggests, are current assets, okay, that do not involve financing or interest. Hindi siya kasama kung may financing or interest. So cash and cash equivalents, okay, that's operating. Short-term investment, okay, interest-bearing to, no? Itong investment na to, may interest to. So this will not form part of your operating current assets. So i-olive natin siya. Accounts receivable are okay. Operating current assets yan. And inventories are operating current assets. Therefore, dito sa current assets na to, the only non-operating current assets is short-term investments because STIs, marketable securities, are interest-bearing. Eh, di ba pag operating, sabi natin by definition, hindi dapat interest-bearing yung current assets niya. So we only have cash and cash equivalents, accounts receivable, and inventories. Okay? So we can define our operating current assets in 2021 to be the sum. Kailangan natin i-type kasi malayo tayo dito sa ano natin. For 2021, it's the cash, comma, and accounts receivable and inventories. Right? Control Enter. Okay. So this is your. Okay, lagyan lang natin ng 1 decimal place to be consistent with the mamaya na, with the others. So for this one, you can just copy that. 806. One decimal place. Okay, so let me flash the formula. We're adding for 2021 yung cash, okay, receivables, and inventories because those are your operating current assets. Same thing here. Just copied it. Okay, how about your operating current liabilities? Okay, ganun din ang definition natin. Ito yung current liabilities natin, no? Accounts payable, accruals, at notes payable. And we know that of this, si notes payable ang interest bearing. Di ba? I owe you yan eh. For this amount, for amount received, I promise to pay ganyan-ganyan, tapos may interest yan. So ang operating current liabilities natin will just be accounts payable and accruals, excluding notes payable. So let's sum that up. So this is equal to sum and sum ng accounts payable and accruals. All right. And we copy this to the right. And then we can now compute for our neto, no? Net operating working capital. So that's equal to your operating current assets minus operating current liabilities. Okay, there. All right. So that's our net operating working capital. Ang working capital class that's used in the day-to-day conduct of the business. Okay, any questions about operating current assets, operating current liabilities, and the net operating working capital? Okay, may I have your feedback, guys? Paki-chat kung clear so far, kung yes. Kindly please feedback from the class if they're able to understand so far. Thank you. Thank you. Okay, thank you very much. All right, it's already time. So next meeting on Monday, online ulit tayo, no? So Monday, like, thank you for your feedback. We're going to continue with this. Okay, we're going to tackle next yung total net operating capital, and then we're going to compute for the investment, then NOPAT, and then free cash flow, very important, and then yung ROIC, right? So these are the things, EVA and MVA. These are the things that we're going to discuss, and pretty sure, class, you never encounter this in your accounting. So this is more of finance, economics na ano na topics. All right. So thank you so much, class. Sorry again for this session. Okay, and I'll see you online ulit Monday, and then hopefully, the Lord willing, okay na ako by next Tuesday. Okay, stay safe. Thank you so much.